Welcome to the deep dive. Today, we're skipping the noise, going straight into the raw data from our sector screeners.
Sounds good.
We're targeting the software application space, and specifically the three stocks that really popped on our volume alerts recently. Webull Corp, that's B-U-L, SoundHound AI, S-O-U-N, and Figma Inc., F-E-A.
Right. High volume movers.
Exactly.
Yeah.
So our mission here is basically to treat this data like we're building the definitive report on these names. We want to pull out the key financial, technical, and, news insights to figure out what's really driving all this trading activity.
That's the plan. We're looking at it from all angles, right? The basics, the technical charts, the news flow, the actual financial health or lack thereof.
And valuation, can't forget that.
Crucially, valuation. We need to understand the why behind these volume surges. Why these three? Why now?
Okay.
And just before we dive in, the necessary disclaimer. This discussion is purely for educational and informational purposes. It's all based only on the data we have in front of us.
Yep.
It is absolutely not investment advice. Any talk about potential profits or losses, that's strictly hypothetical, just looking back at past performance for illustration.
Got it. Okay, let's kick off with ticker number one. B-U-L-L, Webull Corp. Software application, financial services focus.
No, B-U-L.
The BUL is a, $6.26 billion market cap company, IPO'd back in August 2022.
Relatively new to the public markets, yeah.
And the technical picture here, it immediately screams struggle, doesn't it? Closed recently at $12.66 and performance. Down over 10% just this week and down 6.5% for the month. It's pretty negative.
Yeah, the technical structure really confirms that sellers are firmly in control right now. You look at the main trend indicators, the simple moving averages.
The 20-day, 50-day, 200-day.
All of them, they're all pointing down. This isn't just a little dip. It feels like a sustained downtrend.
Okay.
What does catch my eye, though, is the RSI, the Relative Strength Index. It's at 39.38.
So getting close to that oversold territory, below 30 is usually the marker, right?
Yeah, exactly. It's heading that way. It means the selling pressure has been heavy, maybe heavy enough that, a snapback isn't out of the question. But the overall trend, still deeply negative.
And there's something else weird in the technicals here, isn't there? That beta, it's minus 0.12.
Yes, that's probably the single most interesting technical data point for BUL.
So for listeners, maybe explain what a negative beta like that actually means, especially for a software stock.
Right, so beta measures how much a stock moves compared to the overall market, like the S&P 500. Most tech or growth stocks have a positive data, often above 1, meaning they move with the market, but usually more.
Or volatile.
Correct. A negative beta, like this negative 0.12, suggests BUL's price moves are, kind of disconnected from the broader market, sometimes even moving in the opposite direction.
So when the market's up, BUL might be down or flat, and vice versa.
Potentially, yeah. It's acting like this strange, almost defensive stock, which is really quite unusual for a company in this, growth-focused tech space.
Okay, so given this technical weakness, this negative beta, what does the price action suggest for potential triggers, buy or sell?
Well, the potential sell trigger is pretty straightforward, just more downside. If it keeps falling below its recent trading range, that just confirms the negative SMAs. It's kind of in free fall and to find some solid support.
And a buy trigger.
The most logical one would be if that RSI actually hits oversold and bounces hard. Maybe the price tags its 52-week low, which is way down at $9.54.
Wow, that's over 30% lower than now.
It is. A sharp bounce off that level could signal maybe a short-term bottom, a capitulation bounce, but it's a risky catch.
Okay, let's pivot from the kind of depressing technicals to the fundamentals. Does the news or the balance sheet offer any hope here? The news seems mixed.
Yeah, you've got some analyst buy ratings, right? Target price, $18.50. Seems partly linked to Webull getting back into crypto over the summer.
But that's bumping up against reports of dismal earnings back in August.
And the financial data really explains that struggle. Look at valuation. Price to sales, PS ratio, is 25.16.
Which is pretty high, suggesting growth expectations.
Exactly. PS tells you how much the market's willing to pay for each dollar of revenue. So 25 times sales implies big growth hopes, but those hopes are clashing violently with the reality of their profitability or lack thereof. Profit margin is negative 211%.
Minus 211%.
Yeah. And earnings per share, EPS, is negative $1.13. They are just bleeding money.
So the market's giving them this high PS multiple, betting purely on a massive turnaround while ignoring these huge current losses.
That's exactly what it looks like. Pure turnaround bet. They do have a decent quick ratio, 1.42, so short-term liquidity isn't an immediate crisis, but the profitability hole is deep.
Textbook distressed growth at. Okay, let's try and quantify the pain with our paper money math. Say someone hypothetically put $10,000 in exactly 1 month ago.
Okay.
Based on that monthly performance of minus 6.50%, the price would have been around $13.54.
Let's see. $12.66 divided by 1 minus 0.065. Yeah, about $13.54 sounds right. So $10,000 at that price gets you roughly 738 shares.
Okay, 738 shares.
And at the recent close of $12.66, that $10,000 investment is now worth $9,350.
A paper loss of 650.
Or exactly that 6.50% drop over the month. It's a pretty clear illustration of how high expectations reflected in that PS can still lead to real losses when the profits just aren't there.
All right, let's make a hard pivot now. From Boo's deep struggles to SoundHound AI, ticker SOUN.
Okay, SOUN, the AI darling.
This is the pure momentum play, right? Well, it's natural language AI. Market cap, $7.70 billion. And the performance, I mean, it's explosive. Up 3.74% today alone.
Yeah, and look longer term. Up almost 17% this week, up over 27% this month, and for the year, up for 300%.
300%. This stock is just on fire.
The technical chart is almost vertical. It's incredible. All the SMAs, 20, 50, 200 days, strongly positive, powerful, sustained uptrend.
And the RSI, still pushing it.
Oh, yeah. It's high, 69.78, right near that overbought level of 70. Suggests the rally might be getting a bit tired, but it hasn't rolled over yet.
But the risk profile here, that beta, 2.79.
That's the key. Beta of 2.79. Let's, put that in perspective for you. If the S&P 500 moves 1% on a given day, SOUN, theoretically, is moving almost 3%.
Oh.
That kind of volatility makes every single trading day feel like a high-stakes bet.
So that extreme volatility, nearly 3 times the market risk, combined with the high RSI, isn't this stock basically a ticking time bomb for anyone jumping in right now?
Well, it absolutely carries huge risk, no question. And you see that reflected in the potential price action triggers, a potential sell trigger, simple profit taking. Very likely after a run like this.
Especially if it fails to break that recent high, around $25.
Exactly. The 52-week high is $24.98. If it stalls there, expect sellers to jump in. And there's another volatile factor, the short float.
Yeah, how high is it?
It's very high, 32.43%. That means almost a third of the shares available to trade are held by short sellers, betting the price will fall.
Right, so if the momentum keeps going up with that many shorts.
That's your classic short squeeze setup. If the stock keeps rising, the shorts get squeezed, they're forced to buy back shares to cover their losses.
Which just pushes the price up even faster.
Precisely. Creates this feedback loop, this extreme volatility. So ironically, that high short interest could feel more upside or a sharp drop if sentiment turns.
Okay, so what's a potential buy trigger then in this craziness?
Maybe a little cool down. A dip that lets the RSI fall back below, say, 60, lets the stock consolidate a bit. But critically, it needs to hold above that short-term 20-day moving average. That would suggest traders are still bullish, just pausing before the next leg up.
All right, let's look under the hood. Can the fundamentals justify any of this speculative frenzy? The news seems positive. Strategic moves, acquisitions.
Yeah, news flow is strong. They acquired Interactions, that was September 9th. Partnerships announced, like with Red Lobster on September 24th. It all feeds this narrative about their agentic AI and growth in the enterprise space.
Okay, but what about valuation?
Well, the valuation metrics are frankly mind-boggling. Price to sales is 58.56.
58. Compared to Booley's 25.
Exactly. Shows an even higher level of market expectation for future dominance. Price to book is also high at 21.29. And like BeWell, SOUN is deeply unprofitable. Profit margin, negative 171%.
Still deep in the red. So where's the excitement coming from?
It's the growth. Sales, quarter over quarter, were up a massive 217%. That's the number catching everyone's eye.
Huge growth.
Huge. But here's a key insight, maybe a disconnect. Look at the analyst ratings. The average target price from analyst is $15.56.
Wait, $15.56? The stock is trading near $19.
Precisely. The market is way out ahead of the analyst consensus. Traders are betting on growth that analysts haven't factored in yet or maybe don't believe in yet.
Interesting. And insider activity.
Also noteworthy, we saw multiple instances of insiders selling shares in September and October. That contrasts pretty sharply with the public market's wild enthusiasm.
Good point. Okay, paper money time again. Let's gauge this AI momentum. $10,000 invested 1 month ago, capturing that 27.14% gain.
Okay, 27.14% up. The entry price would have been about $14.85, so $10 gets you roughly 673 shares.
673 shares.
And today, at $18.88, those 673 shares are worth $12,714.
So a paper profit of $2,704.
Or exactly that 27.14% gain in just 1 month. Perfectly shows the potential reward, but also highlights the immense risk of riding these high beta, high momentum waves.
Okay, final ticker. Figma. FIG. Now, this is the big kahuna of the group, right?
Definitely the largest, yeah.
$34.81 billion market cap,
Right.
AI-powered design platform. Much more established, even though the IPO was pretty recent, July 2025.
Relatively speaking, yes.
And today's action was just, wow, closed up 16.83% in 1 day,
Huge move.
which drove its weekly gain to over 41%.
The technical picture here is all about that news shock. That massive price surge combined with really high relative volume, 2.06 times the average, confirms an extreme market reaction.
So institutions piling in.
Looks like it. All the SMAs are positive, reflecting the underlying strength. But it's that sheer size of the daily move, 16.83%, and there was a big price gap up at the open, 3.55%. That screams immediate aggressive buying.
What kind of news triggers that, and how does that kind of volatility shape the triggers now?
The news was the perfect catalyst. Today's jump is being directly tied to an announcement about ChatGPT integration.
OpenAI connection.
Exactly. Capitalizing on all the buzz from the recent OpenAI developer event, it's a classic case of a big integration story just completely changing the narrative and, well, the price.
Okay, so triggers. Sell side must be tempting after a 17% jump.
For sure. That massive gap and the sudden gain make profit-taking an immediate risk. That's your sell trigger.
Yeah.
Especially since, the stock is still 50% below its all-time high from back near the IPO, $142.92.
It's a long way to go to recover fully.
Right. And there's also a fairly high short float here, too, around 20%. Not as high as SOUN, but still significant. They might cover or add pressure.
Yeah.
The potential buy trigger, though, is confirmation that this isn't just a one-day pop. If volume stays high and it pushes decisively past recent resistance levels, it suggests institutions are genuinely re-rating the stock higher because of this AI synergy.
Now, Figma is interesting because it offers a contrast to BUL and SOUN. It has the high growth excitement, the AI angle, but it's actually profitable.
That's the crucial difference. Let's look at the core financials.
Okay.
Unlike the other two, Figma makes money. Now, the valuation metrics are still very high. Price to earnings ratio is 378.
Whoa, 378 PE.
Yeah, very rich. And PS is also high at nearly 39. But the key is the E in PE is positive. Investors are optimistic about future earnings growth, sure, but there are current earnings.
And margins.
Pretty solid. Profit margin is 10.26%. Operating margin 5.17%. And look at the gross margin, 91.34%.
Wow, that's huge. Shows the strength of their software platform model.
Definitely. Strong recurring revenue potential there. Sales growth QQ is also strong at nearly 41%. So you have growth and profitability.
But we also saw that insider selling back in August, right?
Yeah.
Heavy selling from major owners, CEO, directors at prices around $31.50.
Yes.
How do we square insiders selling big chunks at $31 when the stock just rocketed past $71 today?
That timing is fascinating, isn't it? And really important for you, the listener, to consider. It implies one of two things. Either insiders thought the stock was way overvalued, even at $31 back in August, or this recent ChatGPT news is such a fundamental game changer that it's re-rated the company's prospects far faster than even the insiders anticipated just a couple of months ago.
So the catalyst completely blindsided the previous insider sentiment.
It looks that way, highlights just how quickly the narrative and the price can shift in this sector based on major AI developments.
Okay, let's run the paper money numbers on this explosive move. $10,000 invested 1 month ago. Performance was 33.31% up.
Right, 33.31% gain. So the entry price would have been around $53.32. $10 buys you about 187 shares.
187 shares.
And after today's massive surge to $71.08, that $10,000 position is now worth $13,331.
Nice gain. An estimated paper profit of $3,331.
For that 33.31% monthly return. Figma really demonstrates the raw power of a perfectly timed, market-moving news catalyst, especially when layered on top of existing profitability.
What a session. I mean, just looking at these three, you see three completely different stories playing out in the same sector, all driving high volume.
We really do. You've got BUL, the distressed growth stock, right? High sales, multiple, but bleeding cash, weird negative beta. Then SOUN, the pure AI momentum rocket.
Yeah, insane volatility, huge growth, but also huge losses, and the market price way ahead of analysts.
Exactly. And finally, Fig, the big profitable platform that just got a massive shot in the arm from a key AI integration story, making that earlier insider selling look, well, poorly timed in hindsight.
So the big picture is about these disconnects.
I think so. Why is SOUN's price soaring so far beyond analyst targets? Why did Figma insider sell heavily just before this massive positive news? Understanding that gap between the market story or narrative and the underlying numbers or fundamentals, that's really key.
Okay, that sets up our final thought for you, the listener. We saw these three distinct flavors of risk and reward today. The struggling turnaround, BUL, the high-flying volatile AI play, SOUN, and the established player getting a huge boost from partnership news. So what stands out more to you? Is it the immediate, powerful impact of a big news event, like that ChatGPT integration for Figma? Or is it the slow, grinding pressure of fundamental performance, like the negative profits weighing down BO, even with its high sales multiple? Something to think about.
Definitely food for thought.
That's our deep dive for today. Thanks for joining us.
Thank you.